Let's react to this video together. We're going to listen to Ray Dalio talk about he's expecting a bubble, especially in AI, in the stock market. And I want to hear you guys' opinion because I know everybody's going to be all over the place. Some people think this is just following the wave. This is the next best thing. Some other people are just waiting in the sidelines because they know that something isn't right. So this is Ray Dalio. We should definitely pay attention and listen together. Then after we hear what he says, I'm going to give you guys my opinion. But in the comments, guys, let me know what you guys think moving forward. All right. So let's move into this.
Here joining us to discuss the markets, the history of economic bubbles, artificial intelligence, so much more. Bridgewater founder Ray Dalio is with us. Good morning to you, sir.
Good morning.
So you've been providing lessons for us for a very long time about economic cycles and where we are and what's going on. The big question in the market right now, because we're looking at NVIDIA this morning, and I think a lot of people are waking up thinking, where's the market headed next, has been this question of an AI bubble. And I'm curious where you ultimately come down. Are you with Jensen Huang, who says he doesn't see it that way, or do you see something else?
There's definitely a bubble in the markets. Bubbles, what is a bubble? Right?
Okay, what is a bubble?
What is a bubble? A bubble is that there's a lot of creation of wealth from various ways, such as you decide that you're going to have sell $50 billion worth of stock and value it at $1 trillion, or you have multiples like that, and then you create the wealth that way. And then the question with all this wealth relative to money is who needs the money. So it's a matter of who the buyers and sellers are. For example, if we had a wealth tax,
right,
or if you had a tightening of monetary policy, then there has to be the selling of those assets. So in order to pay those things. So there's a mechanics of who owns it, is it over-owned, and so on. It's not the long-term duration of the earnings. So you think about it, isn't it interesting that we have such a short-term reaction? It's great, right, that what the results are, but this is it's valued as a long-duration asset. So for 25 years, the next 25 years, it's very unknown. We don't know what's going to happen, and bubbles don't happen
right,
because of good estimates of what in the future. It happens because of the need for cash. Do you sell that asset? Do you have to sell that asset for cash for some reason?
Well, that's the question, though.
So your book, I thought...
And I thought it was pretty interesting what he said, right? Because lately, you know, all you guys could remember what happened during the GameStop situation, right? We got a lot of people that's investing in these stocks now just following hype, right? They're not investing for long-term situations. So what actually happens when people, oh, I need money now, right? The economy, oh, we're seeing that the economy is getting bad, right? We see that, payments, people's wages is not increasing, rent is getting higher. What happens when we get to that point when people need to start taking money out of the stock market? Because it's kind of showing that people is not investing in it because they expect this to be substantially growing in the next 10 to 20 years. Plus, I think now in today's time, nobody is investing long term, right? The only people that really talks like this is him or Warren Buffett, right? They talk about, hey, what is the best thing that you have ever done? I just hold on to these stocks because I expect them to be in business and do well for a very long time. No investors is really doing that today. They're just looking to get into something, get into the hype, take their profits and close off, right? So I thought it was pretty interesting.
Did such a good example. I mean, I thought, by the way, your book is fabulous.
Oh, thank you.
But you take the 1929 and then you say, what made it?
And it's interesting too, right? Because we could also hear that he still reads. You can see that he's still educating himself, right? So he even reading a person's book that's interviewing him. So I thought that was pretty cool. You know, it shows how humble these guys are, right? Like they're always educating themselves, always reading, always studying.
It go up and what made it go down? And that dynamic is the way bubbles work, right? And so if you take who has exposures, how much leverage is used, and so on, this is about 80% into a bubble that was 100% would have been 1929 and 2000.
So how much leverage do you think is supporting all of this? Because we were talking to Partsenevelis in the last hour, and she was explaining this idea that Jensen Huang doesn't see a lot of the transactions that he's been doing. We were talking about these circular transactions where he's effectively taking an equity stake in some business, and that business is then committing to buy his chips, if you will.
Yeah.
A form of vendor financing with sort of a equity overlay, maybe, is the way to think about it. Do you look at that and say that's a problem? It's not a problem? Should we think about vendor financing in a different way? That was something that got a lot of the fiber guys in trouble in the late 90s, for example.
Yeah, I think it's an issue, but I don't think it's the main issue. I think the real issue is who owns the stock.
Okay.
Is it in strong hands? Not just one stock.
Right.
Isn't it amazing we're talking about one stock for the stock market bubble, and we're talking about for the economy bubble? So you have such a small percentage of the economy, such a small percentage of the American population in terms of wealth and so on, concentrated, and everybody in it, and in a leveraged way.
When we talk about who is owning the stocks, I'm pretty sure you guys know. It's like BlackRock, State Street, right? You guys can name a few others as well. But we know that, just BlackRock in general, we have an understanding they're owning 20 to 30% of every single stock out there, right? So I like to think that BlackRock is kind of like the government, just that they owning so many shares to these companies that they're able to get inside these meetings and change all their rules and et cetera, et cetera. So I personally think it's okay, right? It's not like the majority of people owning these stocks are regular people on a day-to-day basis. It's institutions, it's hedge funds, right? Is these corporations like BlackRock and State Street, right? They're the ones that owning majority of the shares, right? What if it's their individual company, right? What if it's their own people owning majority of the shares, right? So that's really what he's digging down to.
In various ways, it has leverage.
What are strong hands? How would you define that?
Weak hands would be the public.
So retail investors are weak hands.
Right.
Strong hands are the owners of these companies.
Right. In other words, strong hands is that they primarily invest their own money. You don't have public, right? The weak hands is largely, let's say, a leveraged public, and all united about that. Yeah. That's one of the key ingredients of a bubble. Right. So it's not just pricing, because we have to find out. Your book did such a great job of looking at the wonderful companies in the 1920s, and then it enumerated how electricity came out, right, and General Electric and RCA and so on. And those companies went down 90%, not because of the economy and so on. The bubble burst first because they needed cash. So you have to understand that wealth can't be spent. In order to get money, you have to sell wealth in order to get cash to get the money to buy things. And so when that happens, bubbles burst. So bubble bursting means, let's say, a tightening of monetary policy is classic, but also something like wealth taxes can happen. Mm. For example, think about wealth taxes forcing sales of assets that you have to.
You're right. By the way, there's a proposal for a wealth tax in California right now.
Yeah, so state and national, right? State and national. I'm just trying to describe the mechanics of a bubble.
But you said we're at 80%.
Yes, I have a bubble indicator that goes back to 1900.
And it's like all their bubble indicators been like this for like the past 2 years. Like they've been saying recession is going to happen for like the past 2-3 years, guys. Like, and it's true. I personally think the way we look at recession is a lot different, right? Because of what happened during 2020 with injecting of a lot of cash, right? So a lot of money, like dollars, is out there, but the problem is inflation is high, right? So people look at like what I'm trying to say is like people look at being poor differently than what it was before. You know, like people are poor, like say middle class or lower class, right? Lower class people, they still got the money to buy goods, right? They still could buy their shoes. They still could go out to eat, right? They still could do the stuff, but they're low class. So the access to money, right, is a lot different than what it was back in the days. So the expectations of the markets now, I feel like the markets is acting differently than the way it was before. Recession is not the same, you know, because we get access to cash so quickly now, so a lot more easier, right? The way that people access debt, get loans, right, put it into the markets, right? More people working, more people doing their jobs. They don't even know what 401ks are, right? They just know that it's included with their job. People are investing in the markets and don't even know, you know, so the access to money and to put it into the markets is a lot different. But what I was saying before, he actually hit it on the point where he was like, the weak hands is retail traders like us, obviously, and the big hands are like I don't think he just want to say the names. Like he's a big player, you know, but he's not going to say like, oh, BlackRock is these institutions, but also the companies that are buying their own shares too. So what happens when they need cash, right? What happens if NVIDIA needs cash? They're going to have to pull out their shares. You get what I'm saying? And that's what's going to.
So in terms of the pre-market Australia stock stories, they are available on the headline feed. So first off, for Astral Gold, company announced TSX V approval to issue shares. Babcock announced Lachlan Edwards was appointed as chair, and Kate.
My bad for that. That's just the news feed for the private group. But yeah, let's continue this, guys.
And it just makes it has a number of indicators. How much leveraging? Who has the leveraging? Is it what is the amount of money in wealth that relative to the amount of cash that needs to exist, and so on? These indicators, there are a number of them, show that we're on that chart. If I was to show you the chart, it's about 80% of where it was in those two times. That doesn't mean that that's the end of the move, okay? Because bubbles have to be pricked.
Right.
And so you can measure that there's vulnerability, a lot of vulnerability. There's a lot of vulnerability of who's holding what.
Here's my question to you about that, which is if the bubble is at this 80% range on your index or metric, there are folks, we had Paul Tudor Jones come in here a couple weeks ago, and he said, look, I think we're in October of 1999.
At Corient, wealth management begins and ends with you. We believe the more personal the solution, the more powerful the result. We never lose focus on the life you want to build. It's time for wealth solutions as sophisticated as you are. It's time for Corient.
By the way, the market would still have 40% to go. Back in 1928, Charles Merrill, who founded Merrill Lynch, told everybody, get out of the market because he thought it was a bubble. And he was right and he was wrong insofar as from the beginning of 1928 to September of 1929, stock market went up 90%. And so.
But I think that when you're looking at that, you're looking at it incorrectly, okay? What is a bubble is the definition, right? I want to reiterate, a lot can go up before the bubble bursts. A bubble is an unsustained set of circumstances. It has unsustained amount of buying.
Right.
It has an unsustained amount of valuation. It has, and then there's something that pricks the bubble.
Is there a way to sustain this, though?
You can't look at, don't sell just because there's a bubble. Okay? Don't sell just because of bubble. But if you look at the correlations with the next 10 years returns, when you are in that territory.
I thought that was important about what he says, right? Because people was mentioning bubbles. It doesn't mean that things is going to sell now. They anticipating that something bad is going to happen, right, guys? They know that something bad is going to happen. So they just have to wait until that thing actually occurs. That's when it's going to drop. So all this upside, everything that is, they're getting the indicators that something is broken, that something isn't right. But it's just speculation at the moment, right? That's pretty much what he is saying. So every bubble that happened in the past, it was always something that whatever triggered it is always something different, but the way it happens is normally the same. So we get in all of this upside. My opinion is it's just a lot of hype, right? Because if we're really looking at tech stock technology, right? Just in you guys are in America, right? When you look at a camera, a computer, your phone, right? There's really nothing like why is a tech stock worth more than countries? And when you look at an Apple phone, right? All they do is just make it thinner and better the camera. So it's not like we're in a new age of technology. It's like nothing is really crazy. When you look at cars, I think the best thing that's been actually created is like Tesla, right? Because I think that's like new. Now the cars are like completely new, where you get the new nice flat screens and stuff. Finally putting technology in the cars now, but this should have been like 5 years ago. So it's like, why is these tech companies worth more than the damn planet? So yeah, like something ain't right. So I'm personally thinking the entire markets know something is not right, and they're just pumping the markets as high as it can go. So whenever that bubble bursts, when it drops, it's going to be a big drop, but it's going to be a cushion. It's going to be a cushy landing where it's not going to cause so much bleeding, right? Because if we're like at 20, like right now, you could say NASDAQ, just to throw out a number, we're at 30,000, right? And we get the bubble to burst, and then it goes down to 25,000. It may be the quickest drop it's ever been, but it's okay. It'll be different if it's from 30 and it drops to 15,000, right? 15,000. I think that would be insane. But would this be actually worse than COVID, right? Will we get a actual drop in the stock market that was worse than 2020? Like what could be worse than that? That people not working, right? Nobody in the whole world is working. So is this AI bubble worse than that? I think it's going to be pretty interesting. Okay, let's try to listen to the rest of it. I want you guys' opinion also, man. Just let me know in the comments.
You get very low returns.
Yeah. By the way, JP Morgan just did a report on this that showed that if you got in at over a 23 PE multiple, typically over a 10-year period, your return is a delta between 2% and minus 2% a year over 10 years.
Yeah.
Which gets to your point.
I just put out today a post on this, and you'll see the charts, and if you go on that. So I think that you have to say it's unsustainable. Then you have to go to the timing. What is it that pricks the bubble, right? Mm-hmm. Typically, a tightening of monetary policy. We're not going to have that now,
okay?
Right? Mm-hmm. But you could have something. In other words, the need for cash.
Right.
The need for cash is always that which pricks the bubble. Because when you have wealth, you can't spend wealth.
Right.
You have to sell wealth in order to get the money to buy the things you need or pay the bills you have.
I think that's going to go over a lot of people's heads, right? Because the Federal Reserve is ending QT. Usually, like at the start of QT, that would be a reason for the stock market to push lower. But it's not, because the central banks, the Federal Reserve, is at the end of quantitative tightening. They're stopping in December 1st, right? So that's not a reason for the stock market to come down. Like the way the markets is rallying is unsustainable. That's what he's saying, is like now we're going to get into the next phase, which could be quantitative easing. The markets is already expecting that. So it's like the rally is just so aggressive. Eventually, if these guys want their wealth, they have to pull their money out of the stock market to get the cash so they could get the wealth, so they could buy the things that they want. So what is going to lead them to that point? And that's what he's trying to say. So he's not saying that the bubble is because, like I was saying earlier, like tech sucks and is rising for no reason. He's not saying that. What he's saying is eventually, if these people want to be wealthy, they want to buy stuff, they have to take money out of the markets to have their wealth, because it's just liquid. It's just in the markets. So when they need cash, that's going to be the bubble. But what's going to cause that problem, right? What is going to cause them to want to get cash. I think that is what's going over all of our heads, right? So what is the thing that is going to make these guys want to access cash? And that's going to be the next bubble, right? So what, like, is it the bank problems? Like, are they going to have an issue getting loans, right? Are we going to have a credit issue? They can't take out loans, right? So would that be in the next reason? So I want to know what you guys think. I thought this video was pretty cool, man. I like listening to these guys. Hopefully this video is helpful. I want to hear your thoughts in the comments. Please like and subscribe, and also share this with another trader. Have a good one, guys.